Hi there, it's Victor here. Hello, welcome, ladies and gentlemen. Welcome to another session of how to grow your wealth. Today we will be talking about bond investment for beginners. Yeah, that's right, bond investment for beginners. So if you're intermediate level or advanced level, still the same, it might just be a refresher or a checklist. You know, each and every one of us have been involved in bonds in one way or the other. When you loan money out to a family member or a friend and they hold it for 3-6 months and they give it back to you, either they are paying you interest or no interest, that's considered a bond. So bond is just you give it out in exchange for interest, or they give you back your money in full. So your principal comes back to you the same way you gave it out. You see, I create this content and these videos as educational assistant just to assist people who are getting into different investment ventures. So if you are here for the first time, please subscribe and press the bell button to be notified every time I upload a new content or a new video, because as time goes on, I'll be updating, adding more content, more videos which are valuable, especially when it comes to investment. You see, bonds are little or not even spoken when it comes to investment. And one of the reasons why is because if you have a bond, it normally has a fixed interest rate for a period of time, usually 5 or 3 years. So it doesn't fluctuate, it's not volatile, so it doesn't really cost any, it's kind of secure and risk-free. Like an average investor, they invest in about 5 different investment ventures. And the bond in the investment venture is to try to balance. It's like you're balancing your budget. If your stock is going up and down, volatile, bond stays stable all through. So you know when you have your bond, it's kind of keeping everything in the same spot. So bonds are always like that. But to really understand the concept, I will do a Q&A, some sort of a frequently requested question when it comes to bonds. So I will go through the question so we can fully understand the concept and how it works. So the question that I will be responding today are: what are bonds? Who issue bonds? Why do people buy bonds? Why do the corporation or the government even, go ahead and, give out these bonds? Where do you buy the bonds? How do the brokers, like the platform where you buy and sell the bond, how do they make money? How to decide which bond to buy? Where to learn about bonds? And finally, we'll also talk about, just like I said before, any investment venture comes with some risk. So we're also going to talk about the risk. Again, this content is educational only. Due diligence have to be taken. Anytime you get into any investment venture, make sure you do your research. And one of the ways you do your research is you attend seminars, read books. Just like I did the other time with stocks, I'm going to suggest some books. I will drop the links in the description below. You can check it if you want to know more about it. The books will be The Intelligent Investor by Benjamin Graham, which is endorsed by Warren Buffett. I have Little Common Sense in Investing by John Bogle, who is Vanguard founder. I also have Rich Dad Poor Dad, Robert Kiyosaki. And you can also read Snowball by Warren Buffett himself. So I will drop them down below. If you want to learn more about it, you can always go ahead and click on it. So that being said, let's get started. And if it's your first time here, welcome. Please subscribe and press the bell button to be notified anytime I upload a new video. So question number 1 is, what are bonds? Well, bonds are simply loans that are given to entities. So you give your loan to entities in return of an interest rate. So you give your money to them, they pay you back some interest. And it's normally within a period of time. That period of time is known as the maturity. Yes, so what happens is that you, as an investor, you buy the bond The person who issues the bond is the issuer and you are the investor. So you buy it, in return, they pay you interest within a period of time. Some of the terms or terminologies you want to know in the bond investment venture are, you want to know what is the coupon rate. Coupon rate is simply the interest rate. So let's say you are paying 2% or 5% per annum. That's your coupon rate, which is also the interest rate. Also the maturity period. Let's say the bond, the duration of the bond is 3 years, the maturity period is 3 years. And then you also have coupon rates, is coupon dates. Coupon dates are when the interest rates are paid to you. And then you have the face value. The face value is simply the bond value at the end of the maturity. So you have that bond with all the interest added on it. The face value is, the value at maturity. So that's some of the terms you need to comprehend when it comes to bond. So from that point, we're going to move to the types of bond. There are actually two types of bond. There is secure bonds and unsecured bonds. Secure bond simply means it comes with some collateral. So let's say a company wants to, a company is the one issuing the bond, and you as an investor, you want to buy the bond. The company comes with some assets, let's say their buildings or cars, that in case they don't pay you back the value of the bond, you can, seize or put some of their assets on, you can put a lien on them. So that's for secure. On the other hand, there is unsecured bonds, which is just like unsecured credit card, where there is nothing to back it up. In case they don't pay, you can just, take them to court or try to file in or some sort of that. But unsecured doesn't come with collateral. Secure comes with collateral. So the best advice is go with secure bond instead of unsecured bonds. So the next question is, who issue bonds? That's a very good question. So bonds are being issued by either corporation or by the government. When I say corporation, I mean companies. So big companies can issue it, and then the government from the provincial level, the municipal level, even the federal government can issue bond. So why do why do you buy bond? Why do people buy bond? Well, it's pretty obvious. It's an investment venture. So people buy those bonds to make money, because when they buy the bond, the corporation or the government pays them interest year in, year out. If it's a 3 years period, they pay them for that 3 years. If it's a 5 years, they will pay them the interest until the end. Then they will give them back their principal. So which means they pay you all those interests, and then at the end they give you back your money. So that's how people make money. And once the contract papers are signed and you agree on a particular interest rate, that's what they will pay you throughout. So it's less risky, less hassle. Your money just keep flowing, the cash flow keep flowing. At the end, you now get back your capital. So let's move to the next question. Why do they issue bonds? That's a very good question. Why would the government issue bonds to people? Well, the government, just like any other entity, needs to raise money when they have major projects. Let's say a city A wants to build a hospital, or it wants to build a stadium or a science center, and they want to raise, let's say they want to raise $10,000. Okay, now they issue the bond. The bond gets to the market. One of my friends, Peter, decided to purchase the bond. When Peter purchased the bond, they come to an agreement that they will be giving Peter a 5% interest per annum. So that's the coupon rate. So when you look at 5% of $10,000, that's how much? That's $500. So which means they'll be giving him $500. Okay. So the maturity period now, if the government says, okay, we want the duration of this to be 10 years. So which means they'll be paying Peter $500 every year for the period of 10 years. So how much would that be? If you do that, you do the math, you'll come out with how much? It'll give you, 5,000, so $5,000. So at the maturity point, the face value would be the money that Peter gave, the 10,000, plus the 5,000 that he has already acquired as interest. Put them all together, it becomes 15,000. So the face value at the end of maturity becomes 15,000. So Peter made 5,000 on profit. So that was a very, very good business that Peter did with the government. The next question, where do you buy these bonds? Well, the same way with stock, you can buy bonds from your traditional bank or you can buy it from brokers. So the same way, there have to be a platform, there have to be a middleman to do the deal between you, the issuer, and the investor. Okay, the next point is, how do the brokers or the bank make money? Well, in the case of bond, it's not commission rate or interest rate, there is a flat rate. So when you are purchasing the bond from the bank or the broker, they will say, okay, we need a 2% flat rate. So 2% or 5%. So from that principal, they take that percentage, you pay them upfront. So you just look, whatever the principal, 5% of it will be a flat rate. Once you pay that flat rate once, the deal is now between the issuer and the investor. The bank or the broker will take themselves completely out. So that's how they make money, flat rate. The next question, how to decide which bond to buy? Good. For you to decide which bond to buy, you also have to do your research. That's why I said investing is an intelligent game. You have to know. If you are dealing with the government, it's a little bit more secure because the government manages the country and they take care of the central bank. So chances are they will pay you. But if you are dealing with a company, due diligence have to be taken to know about the company. Check their investment report. There are certain credit agencies that rates company based on their ability to pay. They have a report card which it starts from A to F. A being a company which always pays, if they have a loan, they always pays on time. F being they are not paying on time. So you have to make that judgment. Do you want to stay with A or do you want to be with F? Sometimes the companies with F, which have bad credit rating, they tend to give you high interest rate to try to lure you to buy their bonds. But advisable to go with companies with A, B. The highest you can go is the rating of C, because you want to make sure these are companies that know how to manage their asset and their fund, and they are responsible, and they will pay you when the times come for them to pay you. The next question, where to learn about bonds? The same, you attend seminars, you read books, you check a financial report of companies, you go to their website or you call them up to make sure if they are doing well, what type of bonds they have to offer. You also watch the TV, but most important when it comes to investment, books. You read books from people who have been there, they have actually invested and they have been successful, like the Warren Buffett, the Robert Kiyosaki. Those books, I have them down below. If you're interested, you can take a look. So what about the last question? What are the risks when it comes to bond? Again, just like every investment comes with risks. One of the first risks in bond, or the worst risk, is, especially when it comes to corporate bond, is a company going bankrupt. If a company goes bankrupt, it means it's a bad loan or it's a bad bond. An asset management company takes control, try to liquidate their asset. Once they liquidate their asset, the best they can get, that's what they pay back to the people who bought bonds. Another thing is default payment. Let's say you are receiving your interest rate regularly and something happened, they start cutting it down, or they tell you that they're not going to pay you, they'll pay you today, they don't pay you tomorrow. Those are also indication that shows that, it might be a little bit risky. You see, the main objective here is to grow your wealth. And if you want to grow your wealth in the investment venture, you have to always make sure you try to minimize your risk and maximize your profit. So which brings us to the end of this session. If you find this content valuable, please subscribe, share, comment down below. Let me know which investment you are in, or which strategies you are taking, or how you're balancing your portfolio when it comes to investment. I would like to know. Until then, I will talk to you. Take care. Thanks for watching, and please don't forget to subscribe.